I went to the wrong interview. So I thought I was going for a trainee stockbroker job. The recruitment consultant that rung me up one day and sold me the dream, as they do, failed to give me quite a lot of detail for this interview. Number one, that it wasn't for a stockbroker. She just said trainee broker. So my mind at the time, as a straight out of uni, had no real experience, thought stockbroker, that seems to be right. I learned a lesson that day, which is honesty is the best policy. I fessed up to the floor manager who was going to do the individual interviews, who said, took us away. He's a very large South African gentleman, quite intimidating. And I just said, look, I've been missold this in terms of, what's going on here. And, can we maybe split this 30 minutes in half? Can I ask you some questions for 15 minutes, you ask me some questions for 15 minutes, and we'll see if we still like each other at the end. And I was the only person that got the job.
Welcome to the Property Funder podcast. My name is Michael Dean. You can find me on the internet at property_funder. I'm here today with Sam Norris. Sam, welcome. I'm going to give you a quick intro on Sam. Sam is the founder and managing director of Grand Union Finance, specialist mortgage brokerage supporting property investors and developers from around the world with their UK-based property businesses. With over 18 years of experience in the finance industry, Sam has built up a reputation for providing creative and tailored financial solutions alongside expert guidance to help clients support and achieve their property goals. Since launching the business in 2020, Sam's grown Grand Union Finance into a thriving operation, managing a team of 6 and specializing in buy-to-let mortgages, bridging finance, development funding, and commercial property finance. His focus on client education and strong lender relationships has been key to the company's success. Sam also hosts the popular podcast, Game of Loans, where he shares insights into property finance and interviews some of the most famous names in the world of property finance. When not running the business or sharing his expertise, Sam can often be found networking at property events or creating engaging content for social media. And here we are. What a segue.
That was brilliant. I mean, I didn't write that.
No, you can thank him for that.
Yeah, that was amazing.
Anyway, welcome. Good to have you here.
Yeah, no, good to be here. Good to be here.
We've known you for a while, as we were talking about before. But it feels like it's been a while since you and I saw each other face to face. I mean, COVID has a lot to answer for, but I think we got unlocked 4 years ago now, so I think we probably have the excuses are starting to dry up.
Yeah, absolutely. It was about time. We got around the table.
I think I'm pretty sure we did see each other post COVID, but anyway, we need to we need to address some of those wrongs, notwithstanding. So we're going to do 2 parts today, as we were saying before. So we're going to focus. We're in part 1 now. We're going to focus on kind of how did you get to being where you are now, and then I guess in part 2 we'll talk about
the stuff that everyone wants to know about.
Yeah, like the fun stuff.
The market, what's going on.
And if we're lucky, we can kind of go through the Lion Squad at the end as a little bonus
because it is being announced whilst we're on air, I think. We think.
I thought the starting point is, because I didn't check the news, but did the base rate go down?
It did, 0.25.
0.25.
We were talking just off air about like social media and stuff like that. And I actually scheduled a post on LinkedIn to go out at 12 o'clock that was about the base rate going down by 2.25. I think it was pretty obvious.
It was nailed on,
it was going to happen. It was nailed on. So I did quickly check it just to make sure, so that if I needed to take that post down very quickly, I could have done. but yeah, went down. So, good news for borrowers.
Yeah, I guess it was baked into the cake. A broker, we just had a broker meeting a couple of hours ago with a well-known firm in East London, and one of the owners there, he said to me, "Look, I really wish they'd put it down by 0.5%. Do you think that would have been the right call today, or do you think that might have sent the wrong signals to the markets?"
I think slow and steady wins the race. I've been saying this all along. We get so many of our clients. We talk to them, and obviously everyone looks at their own interests. And from a borrower's perspective, the lower the base rate is, the cheaper the borrowing. The easier it is for them to do what they want to do, which is fine. We have to think about the wider connotations for the entire economy, because ultimately that's what's going to affect the long-term nature of what they do. And I think there is a bit of short-termism with a lot of our clients, a lot of the borrowers we work with. I think slow and steady wins the race. Let's not do what we did before in the opposite direction, which caused a lot of havoc in the market. What we don't want to do is make too many quick changes too quickly and cause confusion in the lending market. The interbanking lending rates, the swap rates, etc. If they fluctuate too much, it's actually going to push pricing up. So I think they've done the right thing today, if I'm really honest with you.
Some of our audience will be sophisticated and experienced specialist finance professionals, and some people will be a bit newer to the market. You talk about the forward curve. Can you just explain what that is for people who don't know?
Yeah, I think, look, when a lot of people don't realize that the base rate is not really the be all and end all, is it, when it comes to how much it costs to borrow money? Banks borrow money from each other. They lend money from each other. It tends to trickle down. And the cost of that funding actually isn't generally nailed in until the date of completion sometimes. So lenders have to kind of look into, particularly on the mortgage side of things, they've got to look into the future. They've got to make predictions. And the harder it is to make those predictions, the more difficult it is for them to price. The more difficult it for them to price, chances are the higher that pricing is likely to be. So whatever that fluctuation is going to look like, it's probably going to tend to be somewhere towards the top as to where they end up sitting in terms of the products that they release. So the more consistent the market, generally the cheaper the funding ends up being. And we don't have that issue that we had previously in the opposite direction, where the base rate went up really quick and lenders just could not predict what was going on. So a lot of them just pulled out of the market.
A lot of people who talk to me, a lot of my friends who aren't in the finance industry, they'll often ask me to do my Mystic Meg impression and get the crystal ball out and say, where's the, I've been offered this should I do a 2-year fix or a 5-year fix? The thing I always say to them is, look, can you go for the thing that offers you the most certainty, and can you, as long as you can afford the repayments. I always say to them, look, don't try and predict the future. Try and stick with the thing that gives you the most certainty, the least unpredictability. So I guess what you're saying, Sam, though, is that that forward curve, the interest rate on your 2-year fix, it's basically what a bank thinks the average Bank of England base rate is going to be for the next 2 years or 5 years or whatever it is, plus whatever their margin is on top of that, right?
Yeah, to a degree. There's a few other bits and pieces that come into it, but yeah, that's it. And I always say to clients, because every client has got a different situation, a different reason for borrowing money, and everything's got to be bespoke to what their situation is. A lot of our clients are big portfolio builders. So for them, the ability to refinance as often as they possibly can, particularly if the property market is in an upward trending fashion, to keep releasing funds and keep growing that portfolio, that makes a lot more sense. So even if sometimes a 2-year fixed rate might be a bit more expensive than a 5-year, which we've actually seen more recently, which is crazy, sometimes it makes more sense for them to do that. So it's down to the individual. And I think, yeah, like you said, nobody is going to be able to predict the next couple of years in terms of exactly where base rates are. Even in the last 6 months, we've had economists and the markets predicting we're going to have 1 base rate decrease this year. We're going to have 3 base rate decreases this year. We're going to have 4 base rate decreases, and it changes. So no one knows. Anything can happen. Who knew what was going to go on with these Trump tariffs? That came out of nowhere. COVID came out of nowhere. Brexit sort of came out of nowhere. There's always going to be these things that could happen. So I think a lot of the time it's best to hedge your bets and just go with what is going to work best for you individually, rather than trying to predict the market, because the market could change at any point.
Well, without trying to be too thematic, we've got, and obviously a large number of our respective clients and colleagues are of Indian and Pakistani diaspora in the UK. There doesn't seem to be a huge amount of chatter about it, but you've got effectively 2 nuclear powers having a fairly sizable spat in India and Pakistan. How do you think have you seen any impact of that in the market, or has that not been properly priced in yet?
It's so recent, isn't it? We're literally talking 24, 48 hours since we've seen some big news coming out of there. Not yet, if I'm honest. It's so difficult to predict how these international events are going to impact our little tiny island. I think the UK are in a relatively strong economic position comparatively to the rest of the world. I think anyone that lives in the UK, we're feeling it, particularly if you're at the upper end in terms of taxes that you're paying and whatnot. And, we can talk probably about that until the cows come home in terms of millionaires leaving the UK and whatnot. But, we've always had a pretty steady economy, and it's what makes us an investable country. We've had some news today of, Keir Starmer having some sort of agreement with the tariffs with Trump, which, credit where credit's due. He's probably done a pretty decent job there, and it's set us up to probably have a bit more of a brighter future. How much of an impact that had on the base rate today probably hasn't, because it probably wasn't worked in, but certainly it suggests that maybe over the next couple of months we could see another base rate reduction, because our economy is quite settled. Any economy that is settled, any country that socially and politically is also relatively settled is going to be investable. Countries from around the world put money into the UK. So as much as things aren't amazing, there are other countries, some we've just named, that are having a much worse time of it than we are.
Yeah. So do you think the stability, relative stability of the UK, even with all the, Avamore's been running for 10 years, and we've had every 18 months, we've had some sort of event, seismic event. But notwithstanding that, do you still think that by and large, the people internationally look at the UK as a stable country for lots of reasons, and that means that we remain quite investable?
Yeah, not so much as it used to be. When I first started out in finance, London for me was almost certainly the financial capital of the world. And I think that crown has slipped a little bit, unfortunately, because look, whatever your political view is, or your view on something like Brexit, I think the UK was, a lot of people around the world thought that was a stupid decision by the UK. The international community did not believe that was the right thing to do. A lot of people within the UK didn't think it was the right thing to do. And we are seeing some negative ramifications of that still. So I think that definitely was a big hit for the UK in terms of its status internationally. But yeah, relatively speaking, we're still seen as a pretty safe bet when it comes to storing cash, I think.
Well, hopefully for yours and my sake, that remains to be the case. Going to change tack a little bit and get into the sort of the meat of the interview. You were talking off air about how you grew up in Barnet, or you lived in Barnet for many years. How did you get into mortgages?
I tell this story all the time. Like, anyone that has listened to me on a podcast before will know this. I went to the wrong interview. So I thought I was going for a trainee stockbroker job, and the recruitment consultant that rung me up one day and sold me the dream, as they do, failed to give me quite a lot of detail for this interview. Number one, that it wasn't for a stockbroker. She just said trainee broker. So my mind at the time, as a straight out of uni, had no real experience, thought stockbroker, that seems to be right. So I did a lot of research into the stock market and the FTSE 100 and how that all works. All outdated now, I'm sure. But she also failed to tell me that it was a group interview. So I turned up and I was the youngest person there, but I think at the time I counted 11 years. I was surrounded by like Sainsbury's branch managers and Next branch managers and people like that, people that wanted a career change when I didn't know what a career was at that point. But I learned a lesson that day, which is honesty is the best policy. I fessed up to the floor manager who was going to do the individual interviews, who said, took us away. He's a very large South African gentleman, quite intimidating. And I just said, look, I've been missold this in terms of, what's going on here. And, can we maybe split this 30 minutes in half? Can I ask you some questions for 15 minutes? You ask me some questions for 15 minutes, and we'll see if we still like each other at the end. And I was the only person that got the job. And I think it was because I just showed that I could think on my feet. I was honest. And I think he liked that. So that was my first kind of foray into it. It was completely accidental. I always say no one stands up at school when they say, what do you want to be when you're older, and say mortgage broker. That never happens.
So, and what sort of firm was it? What can you name them? Or
it was Alexander Hall. It was Foxtons.
Oh, okay.
So I was on the...
You're not the first Alexander Hall alumnus to come on our show.
I never got to actually, in theory, work for Alexander Hall, because this was back in 2007. So we all know what happened in 2008. They stopped promoting from within. I ticked all the boxes to move to the next sort of stage of the training, and didn't get moved on. Like it was, every Friday, whoever ticked all the boxes, like, congratulations to this person, they're moving on to the next level. And it didn't happen. And then it didn't happen again the next week, and then the next week, and the next week. And then I slowly realized that they were not promoting people anymore because they didn't have the inquiries, they didn't have the work for the brokers that were already there, let alone chucking in some new trainees. So I swiftly left and realized that I had to go elsewhere. I finished off my CMAP, and then one thing they do teach you at Foxtons is confidence. and I strolled into an IFA practice in High Barnet, and said, "You got a free desk over there. Let me go and write some mortgages for you. And we'll split the fees. You introduce the clients to me, I'll do the job, and then we'll see how that goes." That was horrendous. 18 months, 2 years of twiddling a lot of thumbs, trying to figure it out, trying to learn. No one to learn from, having to just literally learn everything myself. So the first, 2-3 years of my finance career were outrageously difficult, and I'm not really sure why I stuck at it, to be honest with you.
I was going to ask, because you can kind of picture it. You kind of going nowhere in Alexander Hall. You then had to leave there on your own back. You've got the CMAP, and then you're effectively self-employed.
Yeah, I was
at 22, 23 years old.
Yeah,
don't know your ass from your elbow.
Yeah.
No guidance, no rabbi to sort of show you, put their arm around the shoulder and show you the way. Most people would have quit.
I know. I'm a big fan of. There's a Richard Branson phrase, isn't it, which is the say yes and figure it out later.
Yeah.
And I've always kind of done that. And I'm never too scared to ask a question. Never too scared. Even now, when we have conversations with lenders, with other people, I'm a sponge. I'm asking questions. I'm keen to know and learn, and hopefully my team sees that and they can sort of implement that too. A great example of that is my dad's a builder, and as the credit crunch was taking hold, and it was clear that I was going to have less and less opportunity to get new clients because the base rate was coming down very swiftly. Everyone was on Alliance and Leicester and Cheltenham and Gloucester tracker rates that were like 0.1% above the base rate, and the base rate itself was 0.1%. There was no way I'm remortgaging anyone, which is the easiest way to get new business when you start out. I was trying desperately to sell insurance, which I've never had an interest in. So he said, should we buy a house and flip it? I thought, yeah, that sounds amazing. He said, well, brilliant, because you're in finance, you know how to finance that, right? I said, yes, absolutely I do, Dad, don't you worry. Complete lie. Google was my best friend, and I just Googled development finance lenders and spoke to loads. I might have even spoken to everyone at that point. Who knows? But it might have been slightly before.
Before our time.
Yeah, whatever the company was before. But I just asked the question. I was like, look, I'm a mortgage broker. I'm a residential mortgage broker. I don't know anything about investments and developments and stuff. Just teach me, just talk me through it. We were lucky. Eventually, we managed a family friend of ours who's got quite deep pockets, funded the whole thing for us, which was awesome. But we did a flip, but in so doing, I learned that there was this whole other world of finance out there that wasn't dealing with first-time buyers that cry when you don't ring them back quickly enough. Which I was never too keen on.
No.
I was a rubbish residential broker. The other famous story that I tell is I had to change gyms once because I tried to do a mortgage for my gym manager and it didn't work out. so I had to change. I had to move to a different gym just to avoid him because I made his pregnant wife cry.
Oh no!
Yeah, it was horrendous. I'm quite happy to admit, as you're on the upward curve, you make a crap load of errors, and you have to learn from those mistakes really, really quickly. And I think that's what's made me better at what I do now, is that I saw the fault in my ways and how I was going about it, and decided that it was a really good idea to go and join a large firm, well-known firm that could really show me the ropes and iron out my flaws. And that's what my next kind of step was as a result.
So what year was that?
Oh God, that would have been like 2010, 12,
Yeah.
maybe ish. Because I remember
I think things are still difficult then. Like it was like kind of the market was starting to get better, but it was still tricky, right?
That's it. And I think this is the big difference between now and then. I think a lot of people don't, especially those who didn't live through, the credit crunch. They don't realize the banks didn't have the money to lend.
Yeah.
Right. That's just crazy. Now they do. The UK is probably as liquid as maybe it's ever been potentially, or it has been in recent years. Maybe not so much this year, but it's still
relative terms. It's
pretty amazing. So there's money to get out the door, and it's why we're seeing, the likes of yourselves pricing so well, because there's competition to get that money out the door. You've got it sitting there, and it wants to get out. So, as a developer at the moment, like it's a good time from a lending perspective. Yeah, the base rate's a bit higher, but all in all, the quality of the funding out there at the moment is as good as it's ever been.
There's definitely some depth. So you joined this mortgage brokerage firm, 2012. Can you say who they are?
Yeah, it's SPF. Yeah.
SPF. Okay,
So,
very well known brand in the market. Yeah. Very well respected brand in the market.
Yeah.
Probably an excellent place to cut your teeth in, specialist.
Yeah, it was. Yeah. I was. It was really useful as well because I managed to sort of. I showed that I was interested in everything. I hung out and socialized with the right people. For anyone that knows SPF, they know that they're used to be, at the very least, a very social animal. And I learned a lot. I got to sit in with meetings with people that have been doing it for 20, 30 years. And I got to hear just the little nuggets, the little ways in which they described things that I thought was really, really awesome. I got my first real kind of exposure on volume of this more specialist market from a bridging and development finance perspective, because they were quite hot on that. They were one of the early adopters of that with a specific team to do it, which I was involved with. So that was really, really good. But again, I think they were still suffering from that hangover from the credit crunch, and just I didn't get as much opportunity to write as much business as I would have liked. I was still, completely green to the idea of trying to find clients, to network, to do BD work. And so I was very much reliant on them shifting me up, and it didn't happen, which is ultimately why I moved on. But one of the directors there, it did come back around. He was a man of his word. He wrote in my leaving card, "See you in 18 months." I went somewhere else, and in 18 months' time, I interviewed back again for SPF, but due to personal issues I had at the time, I'd actually turned him down and said, "Look, I respect you guys too much to come in now. I'm not myself, so maybe we'll cross paths again in the future." But yeah, a really good place to learn and grow. And I always say to young brokers that reach out to me on social media and they say, what should I do? How should I start? And they're always interested in the money. And I always say, forget the money, go and find somewhere where you can learn and where you can get given lots and lots and lots of leads so that you can learn as quickly as possible. And my little joke with them is I'll say, go and do 100 applications and come back to me.
Yeah.
And then I'll employ you.
Yeah, I mean, 100 applications, that's a lot of work, right? And you get a lot of experience in that time.
But if you work for the right company, you should be able to do that in a year, 18 months.
Yeah, I
think. And you will make some mistakes in there, but you're going to have good people around you that are going to support you and show you the ropes. And I think that's the key. I think too many people into this this industry and think that it's all Wolf of Wall Street, millions in your back pocket, and it's not to start with. The first 2, 3, 4, 5 years are hard graft. There's a lot of competition. There's a lot of people that have been here a long time. There's a lot of politics, favoritism, etc., like there is in any sales industry. So you've got to cut your teeth first, and you've got to prove yourself, and that's hard.
Yeah. How did you go about differentiating yourself from other brokers when you're trying to win new clients? Like you talked about BD, right? Business development.
Yeah.
Looking at it from a lender's perspective, right? We have it. It's difficult enough to try and break into established relationships with brokers like yourself, where you've already got a tried and trusted relationship with lenders that have performed for you in the past. How do you break into what I think is even more difficult relationships to crack, which is between brokers and clients, or good clients anyway?
Yeah, I try and I'm just like brutally honest with them a lot of the time. Even last night I was driving down to London speaking to a client on the phone who had a deal, and it just didn't work. And I said to her, you're in danger of really screwing things up if you carry on with this deal. I don't think you should do it. You're borrowing too much. She's borrowing from investors as well as from, institutional funders. And I just said, you're over egging your GDVs on it. She was basically went to an estate agent. They told her a figure, and that's what she presumed it was. And I think that's what it is. I try and really portray that we've got their back, and I'd rather not do deals and then be safe than do deals and it's a transactional thing and we see them once and it's a one and done. I don't want that. Most of our business, I'm really proud that last year, over 25% of all of our business last year was from existing clients. That looks set to probably go up again quite dramatically this year. And then if you include the referrals that we get from our existing clients as well, it's probably over 50% of all of our business. So, I think that's what's telling. Is I just think we try and portray straight away that in what is perceived to be an untrustworthy industry, we're trustworthy, and so we stick out in that regard. So, I don't necessarily think it is an untrustworthy industry on the whole, but it's perceived to be. So if we can show that we're there to hold their hand, I always say, look, I know this might be the first time you're going through this. You might not have experience of working with this type of finance before. Look, you can ask the same question as many times as you like. You will hold your hand throughout. We'll constantly remind you what's coming up. And it's just, I think it's that hand holding, and we try and really truly portray that we're there for them, and we are trying to help them succeed, achieve the goals that they want to achieve, and we're going to be their partner all the way through that.
This podcast is sponsored by Avamore Capital. Avamore Capital is a development and bridging lender based in London, but lending all over England and Wales, lending on projects from £250,000 all the way up to £25 million on bridging, development, refurb and part complete developments. Please visit www.avamorecapital.com to find out more. I mean, the thing that's screaming to me is authenticity, right? The fact is that you're not trying to ram a client into a deal like the conversation you're talking about on last night. There are some bad eggs, right?
Of course there are.
And we've certainly seen a handful of brokers who, they don't have repeat clients. And obviously the fact that you've got that repetitive return client, it's a great sign. It's great. It's obviously a really good thing, and I think most people would aspire to that.
The best thing in the world is when you call a client and they answer the phone, "Hi, mate."
Yeah,
like that's what we're all trying to get to.
Yeah.
So.
Yeah, absolutely. And so let's talk about the genesis of Grand Union. Obviously, you're working SPF, then you leave SPF. How did Grand Union come into being?
Yeah, I mean, I was a little bit of, I suppose, in footballing terms, you call him a journeyman. I've worked for some big names, some small names, some that are somewhere in the middle. And to be perfectly honest with you, I never fitted in as an employee. There were always certain things that I liked about where I worked, but there were too many things I didn't like. Some of the, some of the bad eggs, like we've discussed, I would see and I have to sit next to or opposite, and I have to listen to the conversations. I'm too honest for my own good sometimes. I've got, when you've got sales managers breathing down your neck to hit certain targets, but I'm telling them that it's not right for me to push this client into this deal. It just doesn't fit. So I always knew, I think, from quite an early age that at some point, if I was going to make a long-term career out of this, I'd have to do something on my own. That happened through working with a business partner to start with. We'd worked at Ennis together, and then we worked at Bond Finance together. And we'd known from quite an early age. We used to have our Nando's meetings. So we used to have a thing where we worked that if you worked past a certain time, they would pay a small contribution to your dinner costs. So we would always work up until that point, like 2 or 3 times a week, and go into Nando's. But then, of course, when you go in there, you've got your loyalty card, and we'd be topping that up, and at the end of every month we'd usually have enough for a chicken each. So so we see that, but in so doing, we were able to really sort of decide, this is a really good idea for us to work together. Like we have the same morals, we have the same values. Let's go and do it. COVID hit, jobs were lost. And it just made perfect sense that was the time to do it. It was a kind of a now or never type scenario. The bad thing was, well, I think what we, again, and maybe this is just to do with our industry, or maybe it's to do with just, how industries are in general, is that, when you're an employee, you always see the person above as the enemy. Sometimes that's why I try so hard to build a really nice culture where we are at Grand Union. But it's what we hadn't spoken about was the ambition of what we wanted to do, how we wanted to create a process, what type of clients we wanted to work with. We hadn't really discussed any of that. It was just the fact that we didn't want to work for these other people. And so very, very quickly, it became obvious that we wanted two completely different things. I really wanted to build the best mortgage brokerage in the country. And he wanted an easy life. And neither of those are like right or wrong. He called me one day and just said, I'm not sure this is what I want anymore. And it was like the biggest blow ever. Like, I love the guy. And it was like being, broken up with. it was so horrible. But I very, very quickly then, what I realized really quickly was that by then being the full on captain of the ship, I was able to really speed up our growth because we had one single very clear vision rather than trying to compromise between two. So it was actually a good thing in the end. And he's been mega supportive. Like, we still speak now fairly frequently, and he's such an awesome guy. And he played a big role in getting things started. But as soon as I had both hands on the wheel, I suddenly realized, right, okay, we need to map out exactly what these core values are that we have, what we try to achieve. As I said, my goal is to become the biggest and the best brokerage in the country, to give brokers that don't feel like they have a place or are valued where they are, to have a home where they are valued, where they can learn, where they can thrive, where they can make mistakes and not get whipped for it. That's always been a massive, massive ambition of mine, is to have a queue of people around the door that want to work at Grand Union because they know that they are going to get looked after, and they're not going to be treated like crap, basically. But at the same time, in so doing, if you've got people that are enjoying what they do, the customer service that we can provide to clients will be second to none. And that's always where we want to be. If we're ever going to win an award, and I'm not that kind of person that puts us up for awards and things like that, not yet anyway. It's just, I don't have time for it at the moment. It would be to try and win some kind of award in customer service. I think that's the thing that I would be, that would give me the most amount of satisfaction. We never want our clients to chase us, like we were talking about it earlier. Our industry is renowned for being slow and people having to be chased. So I want to alleviate that and just create a really smooth process that means that everything is really efficient and works really well. And the third side of the triangle is just growing amazing relationships with lenders that want to work with us, because I think there is often sometimes a bit of loggerheads between lender and broker, and we don't want that at all. We want to, again, just like we say when we speak to our clients, they say, "Hi mate," we want that same relationship with lenders.
Yeah, and speaking from a lender perspective, that's the sort of relationship that we at least at Avamore, that's what we want as well. We want to have that collaborative, strong personal relationship with brokers like yourselves, and obviously our firms do business together, and I think that we're
and it's been good, and it's been good as well.
Yeah.
It's been really, really good. Cam's done a sterling job of supporting us.
Yeah, it's why he gets nominated for the, talking about awards. That's why he gets nominated for these big awards, right?
Absolutely. So, it might have been even us that nominated.
Yeah, quite possibly. Yeah, rising star. But for those people who obviously for those specialist finance professionals, mortgage brokers in particular, who might be watching it, thinking about branching out on their own, can you just tell people what's involved? Like, what does actually starting a mortgage brokerage look like? Like in just high level basics. Do
you know what? Because, like I said, COVID changed everything. Jobs were lost, and suddenly everyone. People forget, like when COVID first hit, when lockdown happened, people were really scared as to what was going to go on, and if you suddenly had no money coming in, that was even more scary. We had to set up quickly, and that was we had to set up quickly, and we had to set up in a way that we didn't need an office because we were in lockdown. So we had to be paperless, but we had to do everything very, very, very quickly as well. And that really taught me a fantastic lesson in actually what you need to run a business. Do you know what you need to run a business is a service and clients. That's it. We signed up our first client on our first day of trading. We had a Gmail account, grandunionfinance@gmail.com, still exists to this day. We had no website, no social media presence, nothing. Well, I had my personal social media stuff that I was doing, but that was it. And we wrote business off the back of it. So I think a lot of people, and this isn't just to do with mortgages, this is just business in general. Too many people start businesses or want to start businesses, and they spend so much time wondering about, what are our brand colors and what's our logo going to be? Our original logo happened by mistake, because I just wrote Grand Union Finance on Canva, and sent it to somebody on like a Fiverr or something, and said, "Can you just create this as like a really high res image?" And they came back with these 3 logos that they made up, and one of them was really good. So we used it, and we've gone back now to just having our name, because it's just simpler and easier to read. So yeah, I think for us it was just, again, it's all comes back down to clients. Clients don't care if your email signature looks great. Like we're 5 years in, we're getting to 5 years in now, so now we can start, we're only really now starting to touch everything up. We just had a new website that we just launched. We've got loads more like guides and resources that we're creating. We're starting to think about putting on events for our clients and things like that. We're 5 years in and we're thinking about this. This is a bit of a 5-year journey of graft and things not being, shiny and lovely and looking great. We've just done the business, and we let our work speak for us, rather than being too concerned on, what our branding looks like and things like that. So that's, for me, that's a really clear message for anyone that is looking to venture into this. It's clients first. You need a phone, a laptop, and, registered on Companies House. That's about it.
So, I mean, being in COVID, presumably trying to open a bank account must have been a nightmare.
Yeah, and I hope he doesn't. Engin, if you're listening to this, sorry. Engin's credit wasn't great when we first started either. So we had to go with like an online bank that no one had heard of, which actually we still use to this day, because they've actually been brilliant.
Like Starling or something like that?
No, it's not even that. It's Anna, who no one's ever heard of.
Never heard of it.
Like, it's so good. Like, it's just so useful. We opened that up in less than a week. So this is what I mean. Like, if you want to do these things, I have a holding companies with Metro that took like 3 months to sort out. But
I've been through that with Metro.
Yeah, it's, if you want to get things done, it's funny how, when you live in a solution based mindset, suddenly shit gets done. But that's one of our little mottos. Get shit done. That's it. Don't put off for tomorrow what you could do today. Is, we have all these little mini mantras that we have internally, and they're 2 of them which kind of overlap. I think, too much time is spent, sort of procrastinating.
Well, time kills deals. Like, it's a mantra we just constantly repeating in the office. Yeah. Time kills deals.
Momentum. You need to keep that urgency, that momentum. It's one of the first things any newbie that comes in. We have a little thing that we work to, which is our five-day application turnaround. For the first time we speak to a client, we want that app in within 5 days, not necessarily for us, but for the client. We want things to continue moving ahead. We want to show them that we're proactive and we're moving things along.
No, I love that. What about compliance? How was that when you got started?
Yeah, we were really lucky. We basically became an AR of a friend of mine's company, and that served us really, really well to start with. Maybe it doesn't as much anymore, but it's we're moving in the right direction there, and so that again,
that was a breeze basically.
When you work, when you're living in a solution based mindset, it was, how do we get to the point as quickly as possible where we can legally and compliantly, give advice to clients. It was as simple as that. It's all low hanging fruit. Don't worry about all the other stuff. Just what do you need to make a business? You just need somebody to pay you for a service, and that's it.
No, that's perfect. 6 people now. How did you go about hiring your team, and what does future hiring profile look like?
Yeah, it's hard. It's probably one of the hardest things of running a business is finding the right people. I didn't realize at the beginning that you're never going to find someone that cares about it as much as you do. So I think that's the first thing. Secondly, just finding people that can do at least an 80% as good a job as you is good enough. But it's all been relatively organic. actually, talk about starting your own businesses. One of my brokers actually he came on board because he reached out to me and said, look, would you sit down with me for an hour and talk me through how I could start my own business? And by the end of it, I was like, you don't want to start your own business. You just want to have a little bit more, you just want to be valued a little bit more and given a bit more autonomy, and you want some leads and some clients to work with. So, just come and work for me.
So it's self-employed?
Self-employed.
Yeah. So is that model self-employed? No directly employed people?
No, we have directly employed support staff, but broker-wise, all self-employed. Our model is, I wouldn't say hybrid because it's sounds a bit weird. It's basically as close you're going to get to being. It's like commission only. I see us all as employees to a degree. They pay their own taxes, but apart from that, they get everything. They get leads provided to them, hot leads provided to them. They get support. They get their compliance done. We've got very sophisticated systems and processes and frameworks to allow them to do their work really easily and efficiently. I think it's a pretty decent gig being a Grand Union Finance broker. I wish I had what my team have when I was younger. I'd have written a lot more business, and that's what we're doing. We're set up to be a hybrid of, your boutique, high expertise brokerages and your high volume. We can do both, and that comes through creating really, really good systems and processes. We need brokers that can fit within that. It allows us to, I'm a big fan of the McDonald's model, basically, where you can get spotty teenagers that are at college and they can come in and they can make you a burger the same as anyone can around the world. We're trying to do the same. And that means that we can employ based on attitude rather than aptitude. And because we can stick them into that framework, we can teach them what they need to know, and they've got the support of really experienced people around them to help them. We have, we should have had it today, but I'm here instead. We have a broker call every Thursday where we all jump on a Zoom and discuss cases that we're working on. So we share knowledge. So I'm, like I said before, I'm trying to create the best place for any broker in the market to come and work. That's one of my ambitions, is that, we'll be employer of the year in the broker market.
You got to love that. Remote or office or hybrid?
A bit of both, yeah. I would love it. If everyone was together. Like it's sad. I know it is. Like when we have our quarterly and monthly sort of get-togethers, we have a quarterly, like everyone's together in Birmingham, and we have a quarterly meeting, and then we go out for food and drink afterwards. And it's, we're the kind of people, we don't go out on these like posh meals. The last place we went to was a brewery that did curry pizza. It was brilliant. And that's
what's not to like.
Yeah, exactly. Like it's everything you want. And that's the kind of thing that we do. But I must admit, I get such a kick out of sitting there, because I don't get it every day, when I sit there and just seeing the whole team and they're interacting together, like on their own without me. It, put the hairs on the back of my neck stand up. I genuinely love it. So I would love a future whereby we do that a lot more. Certainly our, because we're based in Birmingham, our focus for hiring will be people in and around that area, but we don't discount anyone. If you're based in Lincoln, it doesn't matter. If you're the right fit, if you are looking for that place to call home, that you just want to be able to service clients to the best of your ability and learn and grow and just be one of the best brokers in the market, we'll take those people on.
But presumably your clients are nationwide anyway.
International, they're based everywhere. We've got clients in Australia, Dubai, Singapore, and Lincoln.
And Lincoln. Can't forget.
I don't know why Lincoln has just come up,
Yeah,
because I can't think of a single client that's based in Lincoln. But it just popped into my head. But yeah, we've got clients that are based everywhere, and in the 21st century, you can have that, and it's very, very simple. And the fact that we were set up to be paperless as well just makes that so much easier. And
in terms of the future, what's the growth strategy look like, and what's the exit strategy look like? Because obviously you've got your current product set, but where do you what's the next 5 years got in store for Grand Union Finance? Yeah,
in the next 5 years, I want to take on the big boys. I'm coming for them. We
watch at SPF.
Yeah, exactly. I was at their office today because I went to go and see another lender that are based there. So I saw firsthand, what they've built. I want to be the biggest and the best. What's the point? I'm a competitive person. I played a lot of rugby as I was growing up, so you tend to be that way. But it's competitive in a nice way. I don't want to be the best by knocking down everyone else's tower. I want to build my own bigger. That's the way that I always look at it. If we can just continually make ourselves better and better and better, build the team, build the infrastructure, support property investors nationwide, up and down the country, go to all the sponsor events. And really just get our name, to be the number one name in this industry. That's what I want. By doing that, we'll hopefully be able to expand into other areas. Business, corporate, asset finance side of things, insurance, legacy planning. All of these other sort of tertiary things and services that our clients will need, we want to invest in, either by acquiring or growing. So yeah, the future's mega bright. I'm so excited. I wake up every day excited about what we're moving towards, but it doesn't take the eye off the short-term goal, which is to every single day make sure that all of our clients are happy. That's the bottom line, because I believe that if we do that, we will continually move towards the goals we want to hit.
So it's vertical integration of products and services.
Absolutely.
Yeah.
Are
you looking at the SPF model in some ways? Because obviously what they did with insurance, that's really the thing that made Howden want to buy them.
Yeah, absolutely. Look, I've been approached by people that want to buy Grand Union, and it's been an absolute no so far. I don't know what will happen in the future. It's a little bit like we touched on it earlier on from Barnet. I support Barnet, and I always remember a quote from the Barnet chairman, which was, "I will stay as long as I think I'm the best man for the job of running this thing." And I'm the same. No one's more important than the company. And if I get to a point where there is somebody else out there that's better at running it than I am, then we'll move in that direction. Because at the end of the day, it's just about making sure that the company has longevity and, is still here in 20, 30 years time.
Yeah. And let's talk about the podcast. How did podcasts come into being? Presumably very useful. Podcasters, like just being very social media savvy as you are.
Yeah.
Were you social media savvy and then the podcast followed, or was it the other way around?
A bit of both. When I did my master's degree, I had a radio show on the university radio station, KCL Radio. Shout out. And we won a National Student Radio Award. So I've always quite enjoyed media in some one way, shape or form. When I was in my last Grand Union role, my actual last broker role, I started to venture into posting more stuff on LinkedIn, and then particularly on Instagram as well. I saw that as a real growth area, and I didn't really see any other brokers doing anything on there. So I just started posting 4 times a day on Instagram.
Gary Vaynerchuk would be proud.
I'm sure he is. I can't imagine he doesn't follow me. So
who doesn't?
Yeah, exactly. So so vain. And until recently, I Matt, one of my brokers, we were sitting next to each other, and he goes, "Oh, guess what, Sam? I found another broker that's got more followers than you on Instagram." I was like, why would you tell me that? Like, you've just completely ruined my day.
You took the jam out of your donut. For
absolutely. I mean, I understand. She looks a lot better than me, so I would rather follow her than me. But yeah, it's that sort of grew, and I always had this name, Game of Loans, in my head, because although you wouldn't be able to tell now, when back in the day, I used to have like sort of longer, curlier hair, and people used to call me Jon Snow. So I always had this like,
yeah, I can picture it.
So I always had this like Game of Thrones thing, and then it was like Game of Loans. That's got to be. I've got to be able to use that for something. And then COVID hit, and you're getting the same questions over again. What's going to happen? Oh my God, panic. So I was like, well, I think one of the best ways of me being able to send lots of clear messages to as many people as possible is just to record podcast episodes and get people that are in the property industry, in the lending industry, on for an hour on a Zoom call. I mean, if you listen to the first 5 episodes, there's nothing like this. I mean, I still have nothing like this. Most of my guests had better audio than I did. And then I decided at some point probably best to buy a microphone. But we did 5 episodes in 5 days to kick things off that I released. And, it was just conversations with property investors and lenders about the market and what's going on. We had somebody from VAS panel on there to talk about surveys, so it was, we had an estate agent on there to talk about the market as well. So it was very, just get the message out. It did really well to start with. it's not necessarily compared to today, but to start with, it kicked off really, really well, and it just went from there.
Sorry to interrupt, but if you're launching in COVID as well, people had more time on their hands as well.
Absolutely, yeah.
So they've got the time to listen and watch short form content where they just don't have with their busy lives today.
That was it, and so that really, really worked. It's on like the podcast's on kind of like it's a bit of a hiatus at the moment whilst we kind of determine where we're going to go with everything strategically as a company from a marketing point of view. It's quite time consuming, as I'm sure you are.
I'm quite aware, but yeah, we're being going to be a bit more strategic about how we record these episodes going forward, right?
Yeah, exactly. You've got to be. So, I believe that the world of podcasting has gone up a gear since I started doing it. So yeah, I think we need to sort of reset. I think we're like 130 episodes in, I think. So it's time for
you've got like 250 total videos if you include your shorts and reels and stuff like that, right? So
yeah,
how many subscribers? You've got thousands of subscribers.
15,000 on Instagram ish, 15 and a half. And then I think it's about 5 or 6,000 on YouTube. You're
in danger of actually making some money out of YouTube. I mean, 50p, but still, it's better than nothing.
I get this all the time. People are like, "Oh, you're going to try and monetize?" And stuff like, no, like, and this is, and I would mind me, talking about this. I get a lot of like, not hate from other brokers, but I get other brokers like sending me messages like, "Why are you sharing this? Like, why are you telling people this? You're giving away stuff for free. You should be charging for this." And the way I see it is, you just give everything away for free, and then a third of those people that see that and find it valuable will just come and become clients. And that's how we end up getting paid. It's all about just drawing people into the ultimate end goal of becoming Grand Union Finance clients.
Honestly, I think if you look at, I understand, there's always going to be jealousy from other brokers, right? There's, not maybe your level, but obviously relatively prominent especially on people's LinkedIn feeds. In the industry. So relative to my peers, I'm I'm out there, maybe not as much as, Chris from Atelier or, fill in the blank, but, you're obviously putting yourself out there. And I think that people don't, a lot of people don't have that personality. They don't have the confidence to put themselves out there, to get in front of get in front of a camera, get in front of a microphone, put themselves out there, photos on the internet, all of that stuff. And I don't think it's something that comes naturally to most people. Anyway, you just do it. You put one foot in front of the other and just keep going.
Yeah.
That sort of I understand. The point around giving away the information for free, just sharing my thoughts on this as from a lender's perspective, right? Which is that you can give a borrower or client all the information in the world, and that is very useful. If I'm a developer client, it means that I can go theoretically and submit a case to us or fill in the blank, whoever else, right? Or buy select client. You have the perfect file. Here you go. The thing is, shit happens, right? There will be a quirk on your title. There'll be question marks around your build facility, question marks around your experience, question marks around this. The difference from a lender's perspective, right? So why I always would encourage, so I get a lot of direct leads, direct inquiries from clients. I almost never offer them terms directly. I'll always try and do some sort of referral to a broker. And the reason is that the lenders deal with brokers, so we'll deal with you dozens of times a year, if not 50, 60, 100 times a year. We might have cases from certain firms. The purchasing power, the clout that broker has compared to a client who might do 1, 2, best case 3 deals a year, right? You're always going to do more for the broker because that broker relationship is so much more meaningful to you. So a broker who says to you, "Why are you giving that information away?" They don't understand the game. They haven't thought it through. They haven't realized the true value of what they possess, relative to a client who go directly to a lender. Just how it is.
It's the know, like, and trust thing. In the modern age where you see people's faces more and more and more on social media, etc. That those 7 touch points that used to be the staple standard that you needed to hit has grown exponentially. You're fighting with a lot more people. You have to prove your trustworthiness a hell of a lot more than you used to do. So for me, it's I've always been a sort of a quantity over quality type of person in terms of none of my content looks too shiny and new and beautiful. It's firstly it's me on it, so it's never going to be, but it's it's just about what comes out of my mouth. I'm just trying to give as much value concisely as possible, as often as I possibly can. And I always say to people that that ask me those kind of questions, and I'm like, look, if I've got 15,500 people that follow me on Instagram, if I did a post and then all of them contacted me at once, I wouldn't be able to help them. So I'm never concerned with giving stuff away for free and that person might go off and go and speak to a bridging lender direct and get their job done. That's cool. Like, I'm okay with that. It's the third of those people or the quarter of those people that actually end up becoming Grand Union Finance clients that I'm concerned about, and that's what I'm doing it for. And then there's all this. Sometimes there's the guys in between, the guys and gals in between that will try and go off and do it themselves. They realize that they probably need a bit of hand-holding, and then they come back, and actually probably they're the category that end up being the most strong in terms of the clientele that we will work with, because they very quickly see the value in what we do. One of the things I don't post about a lot is actually like why you should use a broker, because I just think it comes across as there's no way of that sounding authentic, because like I know that using a broker works, but not for everyone. Like, there are some people out there that genuinely enjoy the process of doing that. I'm sure they're not loads of people, but loads of borrowers out there that would just prefer to have that control and do it themselves. Awesome. Like, you go and do it with my blessing. You're not the right client for us anyway. So, for me, I'm not concerned if I get a video that doesn't get thousands and thousands and thousands of views. If I think it's mega valuable, the handful of people that do see it that might end up becoming Grand Union Finance clients, that has enabled us to build a stronger relationship to start with. Because what they do is they pick up the phone and they say, "Hi Sam, I need a bridging loan." They don't say, "Hi Sam, can you quote me for a bridging loan?" "Hi Sam, can I get a second opinion on a bridging loan that somebody else has already quoted me for or got me terms on?" They've made that decision that I'm the person to help, or Grand Union is the company to help them and for them to partner with. And that's a big thing that I've seen, is that, and that wasn't part of my plan. It wasn't something I was trying to strategically build. It was just me being very focused and just offering continuous value and advice as often as I possibly could, as articulately as I possibly could. And then the offshoot of that was that people were coming, and like I said, they kind of made the decision already. We didn't have to sell anymore. The ABC went out the window. No more closing. It's just open.
Yeah.
So that's great. It was a nice happy extra that I wasn't anticipating.
Well, I think that's a really good place to end part one on. Sam, thanks very much for chatting with me in part one. Seeing as we've talked about Game of Loans, but where can people find you on the internet if they want to get in touch?
Yeah, I mean, they can literally email me, sam@grandunion.finance. But if they want to follow me, they can look me up, Sam Norris, on LinkedIn, or at the Sam Norris on Instagram, which is where I post most of my stuff. So, and I do check my DMs every single day. So if anyone's got a question or they want to ask me something, do that and expect a voice note in return.
Okay, well, please slide into Sam's DMs. We'll catch you again on the next one in part 2. Thanks very much.